Thanks for tuning into Stocks with Antonio. Today I had to make a video about Serve Robotics, ticker symbol SERV. I haven't forgotten about this one, and I know a lot of my viewers have this one in their portfolio, and they're wondering, hey, what's going on with Serve Robotics? It's pulling back. Do you think it's going to go back up? How high do you think it's going to go? So I wanted to talk a little bit about this one, right? A lot of people right now, especially on YouTube, are only talking about Micron and all the stocks are running up. And a lot of stocks that they were talking about last year that are not running up, guess what? They're not talking about them anymore. But some of you have bought into these stocks and now you're bag holding and you're wondering, hey, what's going on, right? So I wanted to touch bases on a stock that I've talked in my videos that I've been bullish about, that I talked about that I bought last year. So I wanna touch bases on it and get into it. Some things I want to go over the stock market. A lot that we've been hearing for 2026 is that the market's hitting new highs, that we keep going higher, and that we've had this massive run up. And we have the stock market has run up, and some stocks are having a phenomenal, crazy year. And investors that got into those stocks early on are definitely, uh, you know, reaping the benefits of purchasing into good assets and being patient. And some of those have really done well this year, while others have really pulled back. Now, I am bullish in the stock market, but I do want to point some signs that I don't believe we're in that strong of a bull market. And the reason is, believe it or not, a lot of stocks are actually down. Even though you've been hearing a lot in 2026 that we're hitting new highs and things like that. A lot of stocks are been going down, and I'm sure a lot of you that are watching this video know this because you see your portfolio, excuse me, and you see some of your stocks probably some depending when you purchased the stocks, they may be down, they may be red. Look at some of the Mag 7. Not all the Mag 7 are blowing up, right? You see Nvidia's pullback, Amazon's pullback, Meta's pullback quite a bit, Microsoft as well. A lot of these stocks are at the same price that they were in last year. Some are even lower, right? Making them just better buys because a lot of these companies, when you look at their financials and everything, have actually improved, but their stock prices stayed the same or even lower. So there's definitely opportunity out there, in my opinion, in the market. And this market pulls back lower, which I think it could. And some of the reasons is, yes, part of the year the market's run up a lot, but we had a new Fed chair. Historically, if you do some research, when you get a new Fed chair, markets tend to pull back. And then on top of that, it's a midterm year. When I was doing research, and correct me if I'm wrong in the comments, every time it's a midterm year, markets pull back as we get close to it. So it's likely to experience the pullback, right? No surprise there. If you just do a little bit of research and now ease your mind. And also, like I said, even though you've been hearing a lot of positive things about the market, only certain stocks have really been moving this market. There's a lot of stocks that are down. And in my opinion, it's just creating opportunity. Now, you may have purchased Serve Robotic. I have Serve Robotics in my portfolio, so I'm going to share my opinion on it. Some of the things that I do to manage a small cap, because Serve Robotics is a small cap and it's not profitable, right? That means it's extremely risky. It's attractive to retail investors because the share prices are sometimes, in this case, it's under $10, right? So a lot of new investors, or depending how much capital you have, you might find stocks like this under $10 very attractive, hoping you buy it and it 10x's your money. And that can happen. That has happened, right? But it doesn't mean that's going to happen with Serve Robotics. It doesn't mean it's going to happen with that small cap that you may have. It happens sometimes and sometimes it doesn't. So you have to be aware that when you're investing in to small caps, they're riskier plays. These companies have to prove themselves, and they haven't done that. So you're taking big risk, right? Which can end up giving you a big reward, but you may also lose all the money that you put into it. So just keep those things in mind if you are investing in the stock market, especially in the small cap, that they're risky plays. Now, I've been reading some comments where some individuals have been buying Serve Robotics because even though Serve Robotics closed on Friday at $6 a share, right? This thing at one point was trading at 18, at 15, at 12, at different levels. And some people, unfortunately, are really bag holding. Some of the things I do, especially when it's small caps, I try to manage the trade as best as I can. And sometimes it goes right and sometimes it goes wrong. And what I mean by that, so let's say I'm going to make an example really quick. Let's say you're in Serve Robotics, and let's say you see that it's not moving, it's moving sideways, and you bought in to make it easy at $8, and you see it go down to 750. You kind of see that a lot of stocks are pulling back, and you're paying attention to the market, and you see that one day Serve Robotics maybe gets a pop, and it goes back up to 8 or above it. You know what I do sometimes? I sell it. I sell it and then I re-enter if it goes lower. Now I'll warn you, if you're in the market for a while and you start trying short-term trade, sometimes this is what happen when you do that. Sometimes it'll go your way. It went back to your purchase price or higher, you sold it, you broke even, or maybe made a small profit, and you were able to re-enter at a better position. Sometimes you try to do that and the stock takes off and you miss out, right? And sometimes you don't get the opportunity to do that because it doesn't go back up to it. And then you have to decide to cut it at a loss. Those are all decisions you have to do, or have to make. But one thing that I definitely do on small caps, non-profitable companies, you got to try to manage those. You got to be on top of them. Because if you're like, I don't got time, I'm a parent, or I got work, all these things that many of us have, if you're saying that you don't have time to look at your portfolio on a regular basis, to watch those small cap plays, then you're better off taking that money and just putting it into an ETF. That way you're already well diversified. It's already, basically it's all done for you. All you really need to do is just make sure you're adding money on a regular basis. Just make sure you're investing into a good ETF, and there's many of those. If you're interested in some, leave me a comment down below. I can make a future video. One of them is VOO, and there's others like it. And the good thing about it, if you're a busy person, you could just focus on putting money into it on a regular basis. I can't guarantee anything good or bad is going to happen. I'm just sharing my opinion, but I believe if you're really busy and you don't have time to manage trades, just focus on ETFs, mutual funds, things like that, that's already well diversified for you. And really all you need to do is just make sure you're putting money into it no matter what's going on in the market, on the highs, on the lows, when it's sideways. You should focus on reinvesting into it on a regular basis. And I think in the long run, you'll do well. At least in my portfolio, on ETFs that I have, that's what I've done. And it's really grown over time because I've been investing in the stock market for over 10 years, long-term investing, which is exactly that. I would just focus on putting money into my portfolio on a monthly basis. And I would just invest in ETFs and things like that. And I did have common stock, big boy companies like Meta, Amazon, what's another one? Microsoft. Those stocks, I'm very confident in them. So I feel comfortable just increasing my position size over time. And I believe that they're going to continue to kill it when it comes to a stock, right? Because I believe as these companies are going to continue to grow and make investments that are really going to pay off, and we'll continue to see that with time. So those I'm not too worried about. Now, any type of investment does carry risk, but those to me, I feel safer and more confident in. But the small caps like Serve Robotics, you got to be on top of it. Now, one thing that doesn't concern me too much, a lot of stocks have pulled back. It's a midterm year, got a new Fed chair. I believe these stocks are going to run up, and these are just new opportunities. Not on all of them, but like this example, Serve Robotics, I think is an opportunity right now at $6 a share. But you have to ask yourself, do you believe in this company? Because again, it's not a profitable company. Now, in their last earnings, they are showing signs that me as an investor likes. They're growing revenue. They're making new partnerships that's helping them grow. And that's what I want to see, because I don't expect them to become profitable overnight. But I want to see that things are happening in the company that are going to help them get there. So what are we seeing? Increased revenue, the new partnerships, deploying more robots. Those are all the things I believe this company needs to do to eventually get to what? To profitability. And that's why we want to pay close attention to their Q2 earnings, which are coming up. They're actually coming out August 6th. So that's going to be an important date for us that have Serve Robotics. Now, another strategy you can do is leaps. So if you're into options, some of you that are watching this may have done options. You can do leaps, which are long-term options, right? Meaning you're going to be holding this for like a year or longer, a long term. And I was looking at it. Let's say you don't want to invest too much of your capital into a small cap because they're riskier. And maybe you want to take more of your capital, which is, in my opinion, not a bad idea, and put it into something safer like an ETF or big boy stocks. Now, I get it that some people sometimes get turned off because they see a big boy stock like Amazon over $200 a share or Microsoft over 300, and they're like, nah, I don't want to invest in that. It's three. Instead of looking at it, hey, if I just on a regular basis put money into it, believe it or not, you will increase your position size in these companies. Don't let good assets make you not want to invest in it because it's $200. Hey, maybe in a year from now, if you invested in it every month, you might have 5 shares, 10 shares. That will vary for everyone. But if you make it a goal of yours, you can build a position size. And if you're hoping to hold, if you're planning to hold these companies 10 years plus, these companies could be worth a lot more. And in my opinion, they will be worth a lot more than today's price. Just think about everything in life. You're going to notice that a lot of things you used to see a lot cheaper than today. And guess what? 5 years from now, things are going to be more expensive than today. And that's probably what's going to happen to great assets. They're going to go up in value. So good companies and things like that is where I will be putting the majority of my money. Now, if you want to try to increase your portfolio quicker, make some money now, I get it. You might want to do a little bit of short-term plays, and these small caps could be an attractive place. So what you do is options. And if you believe like, hey, like I do, hey, Serve Robotics is at $5. I mean, not $5, $6, but it may even pull back a little bit more. Well, maybe I'll do a leap. I'll do a call option, right? You can do one contract and you do it all the way out for a year or even longer. You can do it. Matter of fact, I was looking at it. You can do it out to January 2028. All right. So over a year, and it costs you under $300 for one contract with a strike price of $6. That's where it currently closed on Friday. Now that's going to change, right? I don't know what the value of the contracts are going to be on Monday, Tuesday, whenever you see this video. Contracts are always going up and down, but you may want to get into a small cap. Instead of putting $1,000, $500, $2,000, whatever it was, you can get into the game, put some skin into the game, right? And say, hey, I got $200. I see potential in Serve Robotics. I believe in it. I think it is going to be the future. I'm going to pay close attention to it. I'm going to watch your Q2 earnings. But I think where it's at right now, near its 52-week low, and that doesn't mean it's a good buy because it's near its 52-week low, right? You got to look at the charts and things. But let's say you feel like, hey, the market's pulling back, and I think it's going to be higher in next year, right? For under $300, you can buy one contract. And for some of you watching this, that may be too much, and that's okay. I understand. But some of you may say, I'm okay putting up $250, for example. And if you lose it, it doesn't ruin you financially. And if it goes your way, that $250 can become a lot more. It can become $500. It can become $1,000. And then what does that do? That's really going to help your portfolio grow because if that play goes well for you, and if you turn that 250, for example, into $1,000, now you have $1,000 that you can go and find another opportunity in a small cap and maybe do another leap option, right? So I'm throwing that out at you because these are ways that you can take some of your money and make it grow for you. Now, remember, options are very risky and you can lose all your money, but it's important to manage your trade. It's important to do a stop loss. Now, I know some of you may say, hey, what's the point of a stop loss? It doesn't work after hours, things like that. Why it matters is because when the market's open, if it's better to have a stop loss because if you didn't have anything, and let's say that the market opens, you just don't do the stop loss, right? You may lose more than you wanted to, and you're going to deplete your capital, meaning now you lose opportunity to be able to take that money and put it elsewhere. That's why you want to put a stop loss. You want to put a stop loss because you want to protect your capital. So, for example, let's say you have the 250, you did a contract on Serve, one contract, and you put $250, and you say, I'm okay if I lost the $250, but I don't want to lose the whole 250. So if it doesn't go my way, I'm willing to lose is $50 on this play. You put in your stop loss, and while the market's open, right, it'll kick you off if it's going to go below that. Now, if it's after hours, something happens outside of your control, and the market opens, and now let's say it's worth 190, well, then you'll have to automatically, when the market opens, you can just sell it. You lost a little bit more. And that's why I said, hey, if you're going to do an option, make sure all that money that you put into that option call, that you're okay if you lose it. And also, you can make money going to the downside. Let's say you see a small cap and you're like, wow, I can't believe that the price is at. It can't hold those levels. I think it's going to go down in the next 6 months. Then you can do a put option and actually make money on the way down. So the great thing about options is you can make money with options many different ways, including to the up and to the downside, right? And you can play a little bit with that with a small amount of money and work on building that money up, right? While you focus on the rest of the money into safer plays and focus on growing the size in those plays. Because at the end of the day, what you really want to do is build wealth long term, right? So one day you could retire from your 9 to 5, retire from your business, and spend the time doing the things you want to, and not spend so much time doing things that you may not want to. Hopefully that makes sense. But in my opinion, at the end of the day, I still think there's opportunity to serve robotics. I think now that it's dropped low, if you're holding it, it could be a great opportunity to buy some and reduce um your cost average depending on where you bought it. If you bought it at the higher prices, it's an opportunity to reduce your cost average. A lot of other stocks are down. It's not like the majority of the market's up and it's just Serve Robotics based on bad news. It's not that. The market's pulling back. We're in a midterm year. Keep those things in mind. I think it's an opportunity to buy some shares currently where it's at and being patient with it and focusing on those Q2 earnings that are coming out in August, because that's going to give us more insight into the company and let us know if we should just go ahead and sell this or we should, continue to be patient with it. And if you don't want to, again, put so much of your money into this, take more of that money, put into safer place, you could do an option call out for a year, just one contract, cost you under $300. Now, I'm not telling anyone what to do. I'm not telling you what to buy, hold, or sell. I'm just sharing my opinion, sharing with you what I'm doing with my portfolio, and how I see things. If you found it helpful, then let me know by smashing the like button. Don't forget, leave me some comments down below. If you haven't done so, hit the subscribe button and also check out the description box. And stay tuned. I got a Discord coming real soon. I'm working on it. Just want to let everyone that's watching this know that it is coming. So if you are interested, you can also let me know in the comments below. But just stay out on the lookout for that. Thank you again, and I'll see you on the next one.